Welcome back, and joining us to put the day's markets action into perspective is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Quite interesting trading today. We have seen the sectors that were running the show and dominating the rally for the past 2 days now in the red today. What do you make of that market's reversal? But also, is it really just a short-term breather in a longer-term momentum of a rally?
It's possible that it can be a short-term breather, but we need to understand that it's happening on a day where global markets, our peers, are nearing record highs, and all because of this excitement or expectations that interest rates will be going down. We've seen Switzerland, the Swiss bank have cut again, UK, Norway expected left the rates as they are. But the data that has been coming out now lately from the US, they're starting to tell us that probably we should be getting a rate cut sometime in September. And with us, we know that markets were happy cheering that formation of the government of national unity. But I think we forgot something, that market participants will forever chase returns. So as there is a bit of stability, because they were kind of worried, as we're counting votes, then they realize that, okay, there's some stability, then they cheered that. My point here is, should another region produce or indicate some nice developments and the guys see good returns, definitely they won't hesitate to dump us and go to that particular region. Nothing personal, not just chasing trends. So I think that is what has been happening now, because it's not like people have signed contracts that will be here forever. It's not fixed direct investment, and I guess hence we call that hot money. At the click of a button, they're here. At the click of a button, they leave us, and the rent itself is surprising. Commodity prices are very firm today. So you'll expect to see the rent at least gaining, and now people expect that there will be rate cuts. That should be negative for the US dollar. The rent should be benefiting from that. But I guess for now, maybe it's gonna be okay. If we think that it's more of a short-term pressure, we hope it doesn't continue like this.
Yeah, hot money leaving us a little cold for today. Also, another stock in which cold water was poured on today is Standard Bank. Of course, that being part of the sector that had dominated the rally that's now in the red. They released a voluntary 5-month update. It seemed like quite a mixed bag. They still obviously are seeing growth, but it seems that there's certain factors and headwinds that have a kind of slowed momentum over there. I'm not even sure if the red trading today was due to that, or maybe just the general breather that we are seeing today, and particularly in the financials.
For the fact that they expect the earnings to grow by a low to mid, single digits. But if you look as well, when it comes to banking activities, expected to grow at least by mid-single digits. But the point here is they had to change the way they account for what they call interest, especially when it comes to stage 3 loans. So that itself managed to increase the net interest income, but equally and opposite to that, there was also an increase when it comes to the impairments. Fortunately, no impact when it comes to the headline earnings per share. But if you look into the impairments, and expected that to increase anyway, but it has mainly been increasing when it comes to a business and commercial banking, personal and private banking, and then it was partially offset by your corporate investment banking. For me, that tells us that consumers, businesses are starting to feel the pinch when it comes to high interest rates. Hence, the impairments from that side have started to increase. And we've been saying it, that net interest income is okay up until a certain point. But up until customers start struggling, then it's a different story.
It's really a double-edged sword there. Well, a company that's not feeling any kind of pinch is Harmony Gold. They released an update saying that they will reach and even exceed their production and cost guidance. Unlike some gold miners, seeming that everything is working in Harmony Gold's favor, to the point where the CEO said that Harmony Gold is a champion in gold mining in South Africa. Of course, we did see that share price climbing almost 3%. What did you make? Everything good on the stock?
So far, it's looking great, better grades, better production, exceeding almost that 48,000 kilograms that they expected. And imagine doing that at a higher gold price, especially in rand terms. That works for them. Guys managing to look into their cost, their all-in sustaining cost will still be below than 120,000 per kilogram. I mean, in rand terms, the gold price is sitting at almost just over 1.3 million. So you check that margin, is kind of decent, and they expect to continue to do okay, given that they will exceed production. They will also make sure that they improve the performance.
Yeah, a big move that we saw today came from Nampak, that share price climbing over 21% at some point. Not really sure where it closed, but they released an interim trading statement saying that they expect to swing from a headline loss per share to headline earnings per share. Is the ship turning here?
I think it is, we can question why is it turning,
Yeah.
whether is it right for them to sell those assets, but I think so far it's paying off. I mean, the guys managed to try to pay down some of the debts. The guys also managed to increase efficiencies. So I think they're trying to do as much as they can. And I think at some point it will become the darling of the markets the way it used to. We know the biggest problem here, it has been the expansion into Africa. And unfortunately, with the volatility when it comes to currencies, as we've been saying, especially as this, even Standard Bank had to mention that, that impact of them and the debt was high. So yeah, I think to some extent, at some point, it's starting to turn.
All right. Well, let's talk about your stock pick for today. What are you choosing?
I'll go for Harmony because I expect these gold prices to continue to stay at elevated levels, and especially if the guys are producing more, selling at higher prices, that should work for them. And you look at their PE of 11.2, I mean, it's just in the mid compared to their peers, and their dividend yield of 1.4%, not too bad, not at the best in the sector, but it's just within the range when compared to peers.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Makwe. That was Makwe Masilela from Makwe Fund Managers.